Let's bring in Bill Baruch. He's the president of Blue Line Futures. He's joining us here this morning. Bill, thanks for sharing part of your Thursday morning with us, a busy Thursday morning. I wanted to dive right into how it's interesting to see crude selling off after another draw on inventories yesterday, the API Tuesday afternoon, the EIA, and I think it's the 6th week in a row of inventory draws for both.
Yeah, it's not extremely surprising to see a watered down reaction, or really no reaction to the big draw yesterday, because it was expected. I mean, you had a hurricane that came through, production was shut down. But again, I mean, it is a 6th week of draws, and that can't be ignored. But there's also the technical side, and crude has struggled 42.90 to 43.25. That's where the March 6th gap is, as well as the 200-day moving average. And I've said on your show for multiple weeks that, listen, I think it's exhausted up here. There's a lot of resistance up here. I want to be a buyer from much lower levels. And now that we broke below last week's low in crude, I mean, listen, you can't sit there and hope for $36 if you're playing the short side, but that's where $36 is where I'd really like to be a buyer in crude oil.
All right. Well, it seems like right now, if you're looking for 45, you're doing just that. You're hoping. Let's talk a little bit about, you mentioned, again, the production side being down. I think that's key. Also, the dollar was up a little bit, so that's going to weigh on crude. I mean, that's one of the factors. As the dollar was weakening, crude was catching that bid, and as it slowed to the downside, crude's lost some of the momentum to the upside. Absolutely.
Yeah, you're seeing the dollar, come back here. Last week, I think it was all the news that leading up to Powell on Thursday, it was really priced in, and then you had the reaction just kind of going through the motions, and the dollar weakened heading into this week and in the early part of this week. But the reality is, and I've always said it, it's the dollar. It's not just the dollar relative to itself; it's the dollar relative to other currencies. Mm-hmm. And the dollar index is mostly, really, the bulk of it is the euro. And right now we're looking at the ECB meeting 2 weeks out, and there's no inflation. They had contracted year over year in inflation earlier this week. They're going to have to do something to try and get inflation started. And that's where the question is, what are they going to do in 2 weeks? And not only that, the euro hit 120. And so all of those, all those ECB heads really kind of paved the way for the euro to make this run since June and really break out. They had the budget that was going. And that budget, by the way, isn't even ratified yet. But all of that had really supported the euro. And now that it hit 120, you're starting to see some of those heads chirp. It's getting a little too high here. Yeah. So I think the market knows that the euro is really due to come in here.
Yeah, Lane seems to be commenting on that 120 level and some of the strength we've been seeing there. And that also helped the euro currency back off, which, as you mentioned, directly ties to the strength we've been seeing in the dollar. And oftentimes we talk about how the euro is the tail that wags the dog. Let's talk a little bit about back into the crude discussion. Are you looking more at the demand side after the hurricane or the supply side? We started to hear from OPEC and how we were going to hear about they're having some issues with Iraq in terms of getting them to participate and provide some of those cuts. Can you talk to us about what you're seeing?
Yeah, that's a really good question, because last week when the market was sort of holding out above 43, and we put research out each day for our clients, we have a bias in there, and it ranges, but that bias we had in crude last week was neutral/bullish. I mean, obviously the hurricane playing out, and that is what I call cautiously bullish. And really, you had the news too coming out of China that they're going to ramp up U.S. imports, and they've already set a record in July, and they're going to do more through August. But now there's some news here today that the stocks are so high in China that they're actually going to maybe pull back on any imports here, or a little bit less in the coming months. So that's also weighing on price. So the demand, China and really India second, has been huge for crude oil to come back and help OPEC rebalance that market through March and through June and July. So if China does pull back these purchases and doesn't follow through with what the U.S. is hoping for, then we really could see the crude come in a bit, and that's where $36 comes in. That's where I'd like to be. I think there's a lot of value at $36 and be a buyer there. But also, it's ironic, because what's going higher here this week is the dollar. It's easier for other countries to want to import U.S. crude oil or U.S. exports in general with a weaker dollar. But if the dollar starts strengthening, then it's going to cost more to do so.
Let's talk about how in your notes you mentioned that, calling a top in this historic stock market, you say, is a big mistake, you think. But today, you think is as good as a day as any to say, if not today, you think potentially the top is near.
Absolutely. It's a fool's errand to say, hey, here's the top today. But really look at everything that's going on. And I mean, even Tesla and Apple are down this morning, I think about each 2% here pre-market. I mean, the exuberance is real. I mean, there are people literally out there counting their money that buying Tesla and saying, oh, Tesla's going to this price, I'm going to walk away with this amount of money. That reminds me of Bitcoin and all those altcoins. It's the exact same thing. You're going into those market and you're already counting your dollars. That is irrational exuberance. That is the definition of it. So I think we're near. And I mean, it may not be, if it's not today, if it's not tomorrow, it's that weekly, week 3, the quarterly quadruple witching. I mean, there's a lot of stories out there. We don't have time to get into it now, but I mean, the amount of calls being bought here. I mean, calls in some stocks are more expensive than the puts, the same distance out. That is extremely rare to see. And so what you're seeing is when people buy those calls, the market makers got to go out and resell those calls, or they're just buying the stock. So ultimately, there's just this rational exuberance driving the market higher, and there's going to be an unwind, whether it comes in the coming days or by that quadruple witching. We're going to see this market much lower. So if you're going to just fade it, it's a fool's errand to know where the top is. Manage your risk, know what you're going in on here. But I do think you're going to see the market sharply lower in the coming weeks.
Yeah, it's probably why the VIX is staying somewhat elevated. There's probably some investors out there trying to buy some insurance. Let's talk lastly about the jobs report. We're going to break it down in just a few minutes. Are you looking past the weekly numbers today, more towards the non-farm payrolls, the monthly tomorrow, or is today as important?
Yeah, I am looking past it a bit. I mean, I think everybody's becoming immune to these weekly jobless claims. It was a big story early on. I mean, the million mark is going to be, that barometer. Sure. I mean, expectations will be up and above it sometimes and below it sometimes, but a million is really going to be the headline. But yeah, non-farm payroll, I don't think it's a coincidence that you're seeing the dollar really rally into this. Now, manufacturing was strong on the headline numbers. Employment gauges are, Listen, I'll take that back. It wasn't strong. It's showing some recovery back. The actual numbers are still lagging where we could have been from the Q4 of last year, and it's a dismal situation in general. But the U.S. is doing much better than other nations, and that's where I think the dollar is relative to other currencies. I think it's no secret why the dollar is rallying this week. You got a lot of that in the past from the average inflation targeting. You got some stronger U.S. data coming out here, and you got the ECB that's expected to now weaken their currency or introduce new stimulus measures. But I think it really hinges, too, on the fact that we're seeing better than expected data here in the U.S., and I think we will continue to do so with that non-farm payroll.